the cash flow statement using the indirect method in 6 steps with your tutor in this TV Barbados series. Step 1. Determine the entity's operating profit. So either you use the gross profit minus the operating expenses, or you use the net income and add back any interest or tax. If you're given only retained earnings, then it's retained earnings. You take the closing retained earnings. You add back any transfers from the profits like reserves or dividends. And then you simply subtract the opening retained earnings. And you should get back to where you want to start. All right, so start with your operating profit. Step number 2, reverse all the non-cash items that were included in your operating profit. So we're talking about depreciation, amortization, gains or losses on disposal or revaluation. Step number 3, adjust the operating profit with the changes in the working capital. So remember, working capital is current assets minus current liabilities. So you're going to find all your current assets, excluding cash and bank, and look to see what changes happen, and you do the same for your current liabilities. So remember, if your current assets increase, you're going to deduct. And if they decrease, you're going to add. If your current liabilities increase, you're also going to add. And if your current liabilities decrease, you're going to subtract. All right, step number 4. Adjust the operating profit with the interest or tax payments. So if you paid interest or you paid taxes, you would take these away from the operating profit, right? These are known as your short-term debt management. So you're making adjustments to that. Good. So once you complete from step 1 to step 4, then you net off that phase. That is phase 1 of the question completed. That's called the operating activities. So this will give you the cash flow from operating activities. So basically all it is the operating profit plus any changes to your non-cash items plus any changes to your working capital minus any interest or tax that you paid. So let's move on to step 5. Step 5 says you're going to identify any cash that you received or spent either from disposing of or acquiring non-current assets. So if you dispose of assets, and you dispose of them for cash, you'll record it. If you acquire assets and you acquire them by paying cash, you'll record them. No other recording is required. So what you do, you're going to net off that as well. So this will give you the cash flow from investing, which is basically you're going to add all the cash that you receive from the disposals, and you're going to subtract all the cash that you spent on acquiring the assets. All right? And the difference between the two will be your cash flow from investing activities. So we move to step 6. Step 6 says we're going to identify any cash received or spent through changes to our equity or non-current liabilities and deduct any dividends paid to the shareholders. Right? So we could change equity by has to be cash being used. That's all we're recording. It's a cash flow statement, so we're recording changes in cash only. All right? So you would again net off phase 3 by adding up any, right? So add or subtract any changes to your equity any changes to your non-current liabilities and take away the dividends paid, right? That will give you cash flow from financing activities. Now, once you've completed all three phases, right? So you've completed operating, investing, and financing. You're going to sum all three phases to get the solution to the question. And your solution should be the same as the difference between the cash and bank balances on the two balance sheets presented to you in the question. And that's how you do the cash flow statement using the indirect method. All right, so that's the end. So until next time, 8-9.